The Federation Accounts Allocation Committee, FAC, has recorded a further increase in distributable revenue with a February 2024 disbursement of 2.07 trillion naira to the three tiers of government. This represents a 23.9% rise from 1.67 trillion naira distributed in January 2024. Allocation to tiers of government comprised 407.27 billion naira for the federal government, 379.41 billion naira for states, and 278.04 billion naira for local government, with all producing states receiving 85.10 billion naira from the 13% derivation fund. Revenue-generating agencies, Nigeria Customs Service, NCS, Federal Inland Revenue Service, FIRS, and Nigerian Upstream Petroleum Regulatory Commission, NEPRC, received 16.27 billion naira, 43.35 billion naira, and 18.68 billion naira, respectively. Well, joining me from United Kingdom, I have Gospel Obele. Gospel Obele is the Chief Economist, Streetnomics. Thank you, Gospel, for joining me today.
Thank you very much for having me. Good morning.
All right, good morning to you too. Well, I remember the first time I had a conversation on the review of the twin policies of fuel subsidy removal and floating of the foreign exchange regime. It became clear that there are winners and losers in this particular policy. Now, the federal government happens to be a clear winner here too. But how has this affected the lives of Nigerians? It doesn't seem to have trickled down, from top to bottom, looking at the three tiers of government.
Well, I mean, right now, the way Nigeria is structured and the way the economy is currently being run, realize also juggling that with the fact that there's been past deficits in terms of infrastructure, socioeconomic deficits and all of that. You have a situation where any policy being rolled out now would come at a trade-off, either a trade-off to government or trade-off to the people or trade-off to the private sector or trade-off to the social sector. There has to be a trade-off. So the complexities of navigating what must be done or what needs to be done, without and ensuring that the trade-off, the impact of the trade-off are sort of relaxed a bit on all the parties involved. It's sort of like the main question, the big ticket issue right now for the government. And that's a bit very technical when it comes to driving the required leadership efforts to deliver on these. So it's not surprising that there are winners and losers. I mean, that's what you get, in the face of every type of policy right now, as it stands in Nigerian economic landscape.
All right, so talking about this trade-off, especially looking at Nigeria, we've seen what Nigerians have had to suffer. Talk about skyrocketing inflation, talk about people even having to withdraw their children from certain schools to some other schools just so they can make ends meet. Now, in view of all of this, are we not supposed to see this same money is being shared trickle down into the lives of individuals? Aren't we supposed to? I mean, there have been a lot of conversation about minimum wage award and all of this, but nothing seems to be happening yet. State governments are probably just relaxed.
Yes, I mean, we've gone through this route before. I mean, the problem is not lodging monies and reimbursing into sectors that work, in quotes. The challenge has really been a leadership challenge. If you look at it very closely, this was the case we had with the Shopee fund. Subsidies were believed to have been relaxed, in the economy, and those extra monies were put into the Shopee fund to ensure that socioeconomic investments were driven from that fund. So, and in this case right now, we can't really trace to a particular fund where all of these monies are going to be disbursed from, and even if they're being disbursed, what are the set priorities of the current administration to ensure that we're investing in sectors with high returns on those investments and sectors that would impact significantly on human capital development? And when you talk about human capital development, you're talking about education, you're talking about health, and the quality of life of the average person, and there are many economic indicators or activities that are deeply woven to deliver on human capital development, all right? Many sectors that are top of mind, low-hanging fruits to easily deliver on that. But because we don't have that strategic leadership vision, and the efforts are not really coordinated to a particular the efforts are not really coordinated, in view of a particular path, to deliver XYZ outcomes, then we find a situation where excess monies from those subsidies and all of those things are probably not being utilized effectively enough to deliver social good, as the case may be. Now, they may be utilized in where MDAs think that they are needed, but because the Nigerian landscape is largely driven around inefficiencies and a lot of structural deficits, as far as investments are not, delivered at the root causal levels, to ensure that interventions are sustainable, and to grow prosperity and all that, then we'll keep going back and forth, when it comes to inflation, higher cost of living, and all of these results of, really bad decision making by leadership.
All right. In 2022, let's look at the numbers now. 8.209 trillion naira was shared compared to 10.143 trillion naira disbursements in 2023. This is an increase of 1.934 trillion naira or 23.56%. Now, furthermore, February 2024 figure actually suggests a significant 23.9% surge between January and February allocations. Now, what do you actually attribute this to, and how can the federal government sustain this momentum?
Well, the truth is, when you talk about FAC allocations, you're talking about allocating monies to states and to LGAs in those states for socioeconomic reasons. But if you go further down the line to try to measure the impact of FAC allocations, I don't think anybody has really done that. You realize that, it's just money that, just like trying to fetch water with a basket. It's money that technically goes down the drain because many subnationals are not commercially viable. All right. So if you have a commercially viable subnational that knows what they're doing, those FAC allocations could serve as at least mini-level investments or nano investments that could easily go into, core growth drivers or development drivers for that subnational economies. But realize that in many cases, subnational economies are now worse off by virtue of the further down trickle effect of structural deficits they're faced with, and they refuse to invest in. So FAC allocations happen every month. They happen, look at the amount of money that these individuals collect yearly, vis-a-vis on a month-on-month basis. It's actually quite a lot of money that could go as nano investment into key sectoral drivers. So I would not really bother heavily on in quote unquote the FAC allocations. I would really think about the accountability, the transparency, the best use of public funds at the very root causal level or at the local government level and all that of this FAC allocation. And if you triple it properly, many states are not commercially viable. So those funds end up being wasted every month. And we already know the revenue crisis and the revenue situation that we're faced with in Nigeria.
Let me come in here, Gospel. If you can hear me, Gospel, let me come in here. All right. You talked about some states not necessarily being commercially viable, but are you saying that these states lack resources, whether human, natural, or whatever, that they can actually deepen to create value for the people? Now, if these monies are coming in, aren't they supposed to probably invest them in certain things to create value and make lives of people better?
I mean, to a large extent, what you get when institutions are extractives, that means that, these institutions are built to fund or empower a minority over the majority, because once the majority is being empowered, you realize that they'll begin to demand more, hold government more accountable. And before you know what's going on, there is a self-destruct of the system. All right, to avoid that self-destruct and the minority needs to keep empowering themselves. All right, and that's what we found in this case. All right, ideally, again and again, it's a leadership will and reform issue. All right, there is no will and reform from the state governors to put in their best. Yeah, they will come and tell you they don't have enough funds, But at least at that fact level, you still see the high cost of governance. You still see the lack of priorities. I mean, a friend of mine was texting me this morning that many of the state governors pitch their progress on the roads that they built. I mean, roads are expected. It's normal. It should be a part of what should be delivered. It's not worthy enough. It's not newsworthy in context. What we are talking about in terms of newsworthiness are investment that are triggering sector growth to empower these subnationals, and how those subnationals being empowered are enabling for regional competitiveness. If nothing happens at that level, these monies will not in any way, bring about the impact you're looking for, and we'll keep going about this conversation. So it's not really about if the FAC chunk, if the FAC block is more than what it was last year or less right now. It's more around what exactly is the impact of FAC when you look at it at 36 states plus the FCT spread, in terms of its delivery for the many donkey years, we've been in existence, as the case may be. I don't think this is sustainable. And I think the fact that many states in Nigeria are not commercially viable is a leakage in itself in the system.
All right, you've talked about a lot of things. One of them sounded like the conspiracy, to ensure that the majority do not benefit, so they will not in turn, ask questions. But then you also talked about how that these amounts are shared between or among the three tiers of government. Now, let's look at it. I want us to, take it a step after the other. So at least maybe the majority will learn to, what to do and probably start asking questions with or without, benefiting first from it. So talk to me. Let's look at the local government level now. What are the expectations? What are the things we're supposed to see from the local government? What are the people supposed to benefit from it? Maybe we should start talking about these things. So, people can then know what they're supposed to ask of their leaders.
So if they don't know what they're supposed to ask, if they don't know what to expect, they can't set an expectation. All right. And it's just very simple. If you don't know what to expect, you can't have an expectation to start with. All right. So in the first place, there is no citizen agenda setting. Citizens are not even aware, and they are not aware enough to be able to coordinate, the movement that needs to happen to hold government accountable and to engineer growth and development in their small community ecosystems. Right? We don't have community development as a frontier part or an integral part of socioeconomic development. That doesn't happen in Nigeria. You also have a situation where many of the civil organizations, civil society organizations, and many of the NGOs, so-called NGOs, and even many of them that are even big and all of that, still are not working at the level where they're helping the citizens realize and get the empowerment they need to also lead in terms of the voices and ecosystems building that they can use to hold government more accountable. That's not happening. And as far as that's not happening at the local and community level, then anything can pass, right? To a very large extent, if you have ask the average Nigerian right now, what is the inflation number? What is your local budget? They don't know, they don't care. If I don't tell you, they don't care. Right? So you have a situation where you have ignorance plus arrogance, and that mix is very self-destructive, and it re-empowers at an alter ego standpoint for the critical minority who really need it to stay in power in the context.
All right, there have been talks about minimum wage. I know I started with this. I want to go back there. Talks about minimum wage, wage awards, palliatives, and all. Yet, not so much is being said or done about this at the state level. I know you're more particular about, structural things, structures, investments, and all of that. But then we also understand the situation we're in. And although Lagos has unveiled some initiatives looking at its status, do you think it is doing enough to cushion the effect of these reforms on households' wallets? Not just Lagos now. I want us to just look at the states generally speaking. If you were receiving a certain amount and, you were able to do certain things, and now a lot of persons are complaining we have, high cost of living, and you're getting much more than you used to get before now. What are the things? Aren't you supposed to put measures in place? Aren't you supposed to alleviate the sufferings of these people? There have been talks about maybe some subsidy on transportation, some subsidy on food, Lagos doing Onje Eco and all of that. But are all of these things really enough?
To be honest with you, one of the reasons why I hit heavily on structure is because that's the only sustainable way we can be out of this mess. This mess has been created and curated intentionally and unintentionally over time, over donkey years, all right? Now, leading social welfare programs like what we have in Lagos and all of those states are necessary. They are necessary, but the truth is, regardless of what social programs you bring on the fore, all right, people to a very large extent, for the short, mid to long term, they are going to really be in a very high cost of living crisis. All right. And that is in itself self-destructive, for social economic empowerment and prosperity. No nation can prosper on the grounds of social welfare programs only, when literally you can see the big elephant in the room. The state governors are aware of the big elephant in the room, but they're trying to cushion the impact by, driving social welfare programs. Now, social welfare programs are necessary, but they are not sufficient. All right.
And in 30 seconds, Gospel in 30 seconds. In 30 seconds, I'd like you to, highlight what you think is sustainable. What are those things you think, states should put in place to ensure that we don't go back to where we are right now again?
Yes, number one, at a necessary level, they need to scale these welfare programs extensively and ensure that a critical mass benefit from it. But as they do that, they need to lead the strategic structural interventions, fix the structural deficits, all right? Infrastructure, power, access to market, and all of those things that border heavily on food security, fix them. Once you begin to fix them, it becomes easy to move yams from Benue to the tables of households in Lagos. Once that economics is done right, it's easy to scale. You don't need to, do any more significant welfare programs in the future for people to be able to afford bags of yams or bags of rice or 2 bags of yams and all of that. All right, it becomes easy because the nitty-gritty of scaling socioeconomic intervention has been fixed, and that's what we need to do here. All right, anything other than that is short-termist. It's very non-visionary, and it's very limiting socioeconomic wise in terms of empowering a significant block of people towards prosperity. No nation, no continent, no region grows or scales in terms of prosperity on the grounds of a welfareist economy. It's completely impossible.
All right, thank you so much, Gospel Obele, for sharing your thoughts with us on the show today.
Yeah, bye.
Analysts have expressed optimism as Brent crude oil prices surged to $86 per barrel, marking an increase from previous levels. While this is viewed as a positive development with the potential to stimulate economic expansion, the importance of prudent fiscal management cannot be overemphasized. I'm joined by Bolade Agbola, oil and gas analyst at Chapel Hill Denham Securities. Thank you, Bolade, for joining me today.
Good morning. Thank you very much for having me, Perpetua.
All right, thank you. Now, Brent crude price rose to $86 per barrel. Much ado about nothing, or do you think this holds any form of hope for Nigeria?
Like you rightly mentioned, it's a positive one for Nigeria. Oil price at higher levels is a good one, given that 80% of our export earnings are from crude oil sales. So it's a positive development for Nigeria.
Well, talking about being a positive development, I mean, I would say we've seen oil prices rise above $100 per barrel for even a sustained period, a while back, and Nigeria did not seem to take advantage of it. So what makes this time different? That's why I said much ado about nothing, because it's not just about the price increase, but it's about how the country takes advantage, how the country sees opportunities and takes them.
Yes, I understand that, and you are correct about that. In 2022, we saw oil price, such average oil price for 2022 was around $100 per barrel, and our production was quite low in that period. However, if we look at from 2022 to 2023, we've seen an improvement from about 1.38 million, average of 1.38 million barrels per day to about 1.4 million barrels per day in 2023. And if we look at the average production in 2024, it's hovering 1.56, 1.59 million barrels per day. That's just January and February. So we've seen some improvement in oil production. So we believe that this, unlike in 2022, where we are not able to take advantage of higher oil price, we believe that this year is going to be a different one, given that the government and stakeholders in the oil and gas industry have done they're making efforts to revitalize that economy. We've seen the security checks in that protects pipelines from vandalism and all. They've been improvements in that aspect. We've also seen in recent times where the president made 3 executive orders just to spur investments in the oil and gas sector. We believe that everything coupled together, and with oil price improving, that will bode well for the sector and Nigeria at large.
But they seem to be really optimistic, and that's quite interesting. But then let's take a look at the factors driving the surge in oil prices and the outlook or, possibility of having a sustained surge. I want us to look at, the factors that are driving this surge. How sustainable are they?
Okay, recent times, we've seen this mostly because of geopolitical tensions in oil-producing region. And we see that the Russian-Ukraine tension has been going on since 2020, which started in February 2022, and is still, one of the things that is spurring the oil price to move higher. As there was an attack on by Ukraine on Russia's oil and gas facilities, and that's what has spurred the upward price movement in the recent times. And since this tension has been going on for a while, and we we did not see any clear any clear-cut solution that will come up in the near to short term that reverse the course of these things. We are also seeing tensions going in Israel, although not a oil-producing region, but it's in the Middle East where most of these tankers and facilities that they used to transport oil, crude oil, also go through. I know that stakeholders are trying to, ensure they avoid all those things, but Russia, Ukraine is very important because, Russia is one of the largest oil-producing countries in the world, and so it's definitely going to affect the supply of crude oil globally, and that would, result to higher oil prices.
All right. Well, I like how that you've mentioned, some of these factors that are spurring the recent hike and the price of crude oil. And I just want to know, just before we get back to the Nigerian crude oil conversation, I want to know if that particular tension, whether it is the Middle East tension or it is the Russo-Ukrainian war, if they present any opportunity really for Nigeria, or even risks.
Of course, it would, and we've seen that play out in 2022, where oil prices saw significant, even gas prices saw significant jump in price to, like I mentioned earlier, $100 per barrel. And so, if there is a constraint in supply, it will mean that demand will be higher than supply, and that will push oil prices up. And oil prices higher with Nigeria improving production of crude oil, it's a win-win in terms of earnings that will be accrued to to Nigeria, and the fact that in terms of our revenue, our reserves, there will be, because most of these transactions are dollar denominated, there will be some improved accretion to our foreign reserves, and the CBN is able to further defend the naira, and we would expect that there will be much more stability in our FX, like the exchange rates rather.
That's us hoping that our managers do a great job. But focusing more on Nigeria's crude oil production and exportation vis-a-vis the 2024 budget estimates, do you think the future looks promising?
Okay, I believe that in terms of production, the estimate is very, very optimistic. I believe that in this year we should be able to do about 1.5 million barrels per day, given challenges that are faced in this sector. We highlight that the government are making efforts to ensure that there's improved production, but we believe that some of these, before we see this result, is not in the short to near term. It's more of a longer, mid to long term solutions before investors are comfortable to bring in their funds to invest in the sector. It's going to take a while, not a short-term thing. So this, in terms of oil production, I think the budget is very optimistic. But in terms of oil prices, where it is estimated about $70 per barrel, I believe that that was not optimistic, and higher prices would fend off for the overall the optimistic approach for the oil production.
All right, thank you so much, Bolade Agbola, oil and gas analyst, Chapel Hill Denham Securities. Thank you for your time on the show.
Thank you for having me. Thank you.
The Johannesburg Stock Exchange, JSE, is experiencing a resurgence in initial public offerings, IPOs, amid improving economic conditions in South Africa. Bankers anticipate interest across sectors like consumer goods, resources, and fintech. While South Africa remains a focal point, some African firms opt for offshore listings due to liquidity. Clive Ramathibela Smith, Senior Executive Partner, Hike Capital and Partners, joins me to unpack this. Hello, Clive. Thank you for joining me today.
It's lovely being with you, my sister. Thanks very much for having me.
All right. So talking about the JSE, it saw 2 IPOs, against 11 delistings in 2013. But then in 2024, we have seen only 2 delistings so far. Is this something to be excited about? Do you think JSE is turning the tide?
The reality of the story is rather more serious than that, because if you look at the last decade, the last 10 years, The JSE has lost close to about 77 companies that have delisted. And if you look at over 20 years, they've lost about 10% of the companies that were listed on the exchange. So yes, it's a little bit of a relief because we're not seeing the
Clive, if you can hear me, I do not think I don't know if you're muted, but I can't hear you. Would you try to say something again so I can confirm? Clive, could you please say something? Okay, I guess we're having a challenge hearing him. But of course, we're looking at JSE, and then he's taking us back to 10 years ago, looking at 77 companies, the listing so far, and that is a big number. The next question you want to ask yourself is, how many more companies are listed, and what was the reason, for delisting some of those companies? Oh, well, we'll take a break now. When we come back, we'll bring you more. The European Central Bank is planning to routinely publish internal pay measures being used by officials to gauge inflation risks as they consider when to cut interest rates. The wage trackers, which are designed to deliver data on salaries in a speedy manner, will be made openly available later this year. That prospect would offer investors a fuller version of the picture that officials are getting on the strength of pay pressures in the economy. Meanwhile, U.S. and European equity futures fell, while benchmarks in Asia traded mixed ahead of the Federal Reserve's policy decision later today. The yen extended its decline as traders stepped up short treasury bets ahead of the Fed's decision due today. China left benchmark lending rates unchanged at a monthly fixing on Wednesday, in line with market expectations after the central bank kept a key policy rate steady last week amid some signs of improvement in the broad economy. China has set an economic growth target of around 5% for 2024, a rate that economists say is ambitious and calls for more stimulus, including monetary and fiscal easing. China further boosts current revival of its battered property sector. Now, most new and outstanding loans in China are based on the one-year loan prime rate, LPR, while the 5-year rate influences the pricing of mortgages. These are the business headlines we're tracking at this time. We'll take a break, and when we come back, we have more for you. All right, I'm still joined by Clive. Clive, if you can hear me, kindly confirm.
I can hear you clearly, Perpetua. Thanks.
Absolutely. I mean, this wasn't last week when we had that issue, right? Okay, so basically, you were saying?
I'm saying, it just so happens it's the power cuts again. Showcasing South Africans' problems on national television.
You can say that again. Well, we're talking about JSE, and you took us back 10 years. You can take it up from there.
Yeah, I mean, the last 10 years, at the peak, the JSE was having about 417 companies that were multinationals that were registered on the bourse. However, since then, we are sitting, as we speak currently, with just under 300, meaning that they've lost, at the minimum, 10 companies every year since the last 10 years. And so, yes, it's a welcome slowdown that we've only seen 2 delistings at the end of the first quarter of 2024. We don't know if we'll have more. There's still a little bit of issues when it comes to particularly the resources sector, which is your mining companies there are cutting down. What we are seeing a surge of, which is quite interesting, is that we've got companies that are coming back that are deregularizing things, which are trying to diversify their portfolios by having their subsidiaries actually list as opposed to the main company itself. We've seen some multinationals, for example, the most exciting one that's coming up, that's been spoken about the last 3 years, is Coca-Cola. And that will be very interesting because they'll still keep the main company listed offshore in Europe, but certainly the assets that are based in South Africa and the African continent will therefore be listed here on the local bourse. So that's very, very exciting. But still, we've had an exodus. We've had a lot of companies delisting in the JSE, and it just speaks to the challenges that they are facing in South Africa.
Well, I'd like you to speak to these challenges. I mean, what could have prompted these delistings? What are they saying?
You want me to start with the power cuts?
Maybe.
When you don't have sustainable energy, you're going to have problems in the mining sector. They use the majority of our electricity, the power that they need to generate machinery to work through the systems to be able to mine aggressively. So power is one of the basic things that are required. And unfortunately, we are having a crisis at the moment when it comes to that through the state-owned entity Eskom. We also have an infrastructure deficit. What I mean by that is that South Africa's infrastructure has not been well maintained over the last 10 years. And the cracks are starting to show. We've had bridge collapsings. We've had floods that have created a serious water structure disaster. What has happened is, in actual fact, as we speak to you now, we're not just having load shedding through the electricity, but we're also having water shedding because now they have to share the resources, and so that they can be able to maintain the water supply throughout the entire South Africa, in particular in Gauteng, which is the hub of South African business. So all these factors are coming out to bear. They're starting to show the cracks of either a failing system or a failing government that is not conscious of what its constitutional right or duty is to make sure that these services are being delivered. And that does not make investors feel comfortable. So for companies to feel comfortable, to be able to have more IPOs, to have more foreign direct investment, you need to have a working country. You need to have a functional democracy. You need to be able to be open to these markets so that you can create a sustainable environment for them to thrive in so that the country's economy can grow. And it's no surprise, therefore, why our GDP is below 1%.
You've mentioned some of those things, but I would like to, ask more specifically now. What role do you see interest rate decisions, South Africa's upcoming election, and even plans to ease rolling, blackouts? What role do you see these factors playing in driving investor sentiment in the equities market?
Well, there's a strong feeling. I don't know which economics you've learned, but I know a lot of guys, a lot of scholars will say to you that when there's trouble, there's opportunity. With all these troubles that are happening in South Africa, people are feeling optimistic. Actually, they feel that this is it. They're calling this the South Africa's 1994. If you remember, that's when we first went to the polls in 1994, following the release of Mr. Nelson Mandela. And so people are saying 30 years on, it's time that the African National Congress, or the ANC, leaves office. So there's optimism that has been created by that there might be a change in government, a change in administration, which might make it easier for business to prosper. We might have a multi-coalition type of government. I don't know if that has ever worked, but this is going to be the first time we see something like that if it were to happen. And so optimistically, you would say that things might be getting better simply because the economy started to pull some traction. We started to see that with the first quarter. We've had some good jobs numbers, even though the unemployment is still very high. But there has been a decline in the unemployment rate. We've also seen you remember we were grey listed, and there's been some financial regulatory framework that's been done to try and stabilize the country's financial system. Remember, South Africa's financial system is used to be looked at as one of the best in the world. At one point, the bourse, the JSE itself, was sitting at number 10 in the world of the best exchanges in the world to be in. No wonder everybody wanted to participate on the exchange. But since the likes of the Gupta saga, you remember the state capture scenario, since the likes of companies like Stefanuti Stocks leaving the country, delisting. Anglo recently also diversifying its portfolios and moving away from South Africa, and with Rio Tinto. We've also seen a lack of regulatory framework that protects the financial services in the country. So all those things have created a little bit of a problem, but there are sparks, Perpetua, that you can see. There are sparks, for example, in the agricultural sector. There are sparks in the energy sector. We are currently, actually, as I speak to you, enjoying the Solar Energy Summit, which is taking place here in Sandton, which is all about showcasing all the alternative energy experiences that we can have. South Africa is also toiling with the issue of having nuclear power. I don't know how America would feel about that, or the West, but all these things are positive, and it seems like there is going to be a turning point. And we've seen a slowdown as well in interest rates being hiked. So that also has brought in a lot of positivity. We are looking at the framework that has been done called the NDP 2030, which is also coming back to support business locally. But what we need to see is transformation, Perpetua, that we haven't seen. And I think the JSE itself has to transform. We need to see more Black companies. We need to see more female companies being listed. And that's what they've done, the JSE now. They've cut down a lot of the red tape that would make it difficult for companies to list. But it comes at a cost of the economy being so dire that you do need something to boost it to make sure that you prosper in the next medium to long term.
Right. Thank you so much, Clive, for sharing your thoughts with us today on Business Edge.
Thank you very much.